Every crypto user's worst nightmare is opening their portfolio or their crypto wallet and seeing funds missing. But what if I told you you can make your crypto hacker-proof? Every industry has its hackers, and crypto is obviously no exception, right? Just last year, over $4 billion was stolen from hackers exploiting random DeFi apps and exchanges. Now, that's about $11 million per day being lost in the crypto world. However, this is not people getting hacked directly, right? This is the DeFi apps they use and interact with getting exploited in some shape or form. So imagine Bob has a self-custody crypto wallet, which is not easily hackable. Bob is super cautious and keeps his sensitive info offline. However, Bob connects his wallet to a DeFi lending app and deposits some crypto. 2 weeks later, hackers find an exploit in this app and manage to drain all of the crypto in its pools. Bob's coins were in these pools, and while the crypto in his wallet is safe, the funds he had on this DeFi app are gone forever. But what if Bob could hit a magical rollback button and get his money back? Let's talk about DeFi insurance. Insurance in general is super simple. All it is a contract which says if the individual or entity signing the contract faces financial loss, they will be reimbursed by the insurance provider. Makes sense, right? If you drive a car, it's smart to buy auto insurance. If you own a house in Florida, it's smart to buy hurricane insurance. And if you're an active DeFi user or crypto investor, why not buy DeFi insurance? Probably because you haven't heard of it until today, and that's completely fine. But I promise you, it's much cooler and much easier than traditional insurance. Check this out. dApps like Unslashed Finance are offering instant, zero paperwork insurance on your DeFi activity. So let's say I deposit $5,000 into a lending app like Compound. I now want to buy protection and insure this $5,000 in the super rare case Compound gets hacked. I would make my way to Unslashed Finance, connect my crypto wallet, find the app I want to buy protection against, make sure I'm good with the insurance yearly price, and next I would open up the policy details, which is a super short and concise 2 to 3 page doc telling me what's covered, what's not, and how to make a claim in the worst case scenario. If I'm happy with all of these stipulations, I can now tell Unslashed Finance how much money I want to buy insurance on. Let's cover my entire 5K compound deposit, so if I lose it all, I can get 100% reimbursed. Convert that to ETH, that's about 2 ETH right now, so I input that, then I can see that I'll be paying about 0.2% per year, which I'm totally fine with, right? And then all I gotta do is add cover, confirm the transactions, and we're set. Our crypto is now hacker-proof, and I can sleep like a baby at night knowing my funds are protected. All I had to pay was a tiny premium percentage on the amount I covered, right? So my 0.01 ETH deposit is insuring an entire 2 ETH that's sitting on the Compound app. Okay, so you're probably super confused. How do we just buy insurance without signing one paper or talking to one human, right? Well, welcome to DeFi. This is what we do. Before we get into some awesome content, let's talk about the official sponsor of DeFi Donut, PoolTogether, which allows me to give you guys free and frequent videos. Imagine having $73 in your bank account just to wake up one day to a balance of $43,760 because that actually happened to a PoolTogether user just a few months ago. See, PoolTogether is one of those DeFi apps that seems too good to be true. It is a no-loss crypto lottery, which just means instead of your money buying tickets, it is pooled together with other people's funds to earn interest in the DeFi world. That interest earned every week is combined and distributed to a few lucky winners. You can withdraw your funds at any time, so you have absolutely nothing to lose. So head over to PoolTogether.com and get paid to literally save money. Good luck, guys. So as soon as someone purchases cover on Unslashed Finance, they get these magic coins sent to their wallet, which act as a receipt. And they represent the protected amount. We'll call them P tokens. For example, if I buy $5,000 worth of cover, Unslashed will send 5,000 P tokens direct to my wallet. These tokens are now good for a $5,000 claim, no matter which wallet is holding them. So if I gift them to a friend, and let's say he also has crypto deposited on Compound, his funds are now protected as well. This is why Unslashed doesn't need my name or my information, right? Whoever holds these P tokens is instantly verified and protected in the case that they need to make a claim. This is what the blockchain tagline means, right? Don't trust, verify. Okay, so trustless DeFi insurance is super cool, right? But the cooler part is that it's all peer-to-peer. This is nothing like we've seen in traditional finance and everything we love about decentralized finance. Peer-to-peer means that there is no company with employees supplying the funds, hogging the revenue, and paying out people's losses. It's people insuring other people. Right now, anybody, including you or I, can deposit crypto into the Unslashed protocol and immediately become an insurance liquidity provider. Basically, there are two sides, right? One is buying insurance, and the other side is supplying the capital to insure and protect those funds. So why would people pool their money into an insurance protocol, right? Well, I think double-digit yield is more than a good enough reason. Supply capital to the pool, take on the calculated risk, but also take home the calculated passive rewards. Everybody wins. So remember how there is a ton of different DeFi apps, each having their own policy on the Unslashed website? Well, the team realized it would be confusing and time consuming for people to choose which policies to stake their capital in and how much to allocate to each one, right? Because of this, the Unslashed team has created the first of many curated capital buckets. This allows capital suppliers to stake their ETH into one big bucket, which strategically spreads their funds across the many different policies on the platform. This distributes funds to pools that should be prioritized without the investors having to put any thought behind it. Stake your ETH in a bucket, know that it's being carefully distributed, and enjoy your yield. But last question, where does the yield come from? Like always, I'm glad you asked. Depositing your money into a capital bucket gives you two faucets of yield. First is from those who are buying insurance cover. Every time cover is purchased, the buyer pays a small premium, which goes directly to the people supplying capital to the protocol. Second is from DeFi yield. Check this out. Just like a bank, Unslashed Finance will almost always have a big chunk of unused funds in its possession. Because of this, the treasury takes all idle funds and puts them into various yield earning opportunities across the DeFi world. So even if the protocol isn't at capacity from the insurance buyer side, all of the capital suppliers can rest assured that they are still earning passive returns at all times. This keeps user capital happily in the protocol in case a sudden rush of insurance buyers comes in. If you want to check out Unslashed Finance and protect your DeFi activity, I'll drop a link down below. If you learned something new today, consider subscribing. Thank you guys, and I'll see you in the next one.